Hey, what's up everybody? It's Beeler here again, and today I'm going to be covering a larger video. Just like all the other workshops, this will be the fifth installment, and this will just be mainly day trading, scalping, a lot of just those smaller time frame day trading topics today. So if you're interested in some of these topics, I'll throw it up on the screen here now. Then this is definitely going to be the video for you. So if you haven't already checked out the other four, we had one where Harlan covered about his midpoint strategy and covered a lot of good TA on that and some whole average lines, as well as some good side confirmation with his indicators. My friend Tin Man covered IV, trading spreads, all that good stuff, his favorite types of spreads and how to trade them, how to look at them, how to calculate them, all that good stuff. I covered a very large video on pattern trading and all that good stuff with price action. JBait covered a good video on volume, and then we covered some more price action, mainly bigger time frame stuff so far, and then the volume video stuff, and then now this smaller time frame day trading scalping workshop video. So definitely a good series so far of videos, and definitely going to keep it up. The next one I'll work out maybe a risk reward type video or something, but this one is going to be entirely focused on day trading and scalping. So if this is something you're focused on and we're wanting to kind of sharpen on a little more, this is definitely the video for you. So definitely leave a thumbs up on the video and let's get right into this. Alright, so now that we've had our introduction and you kind of understand everything that we're going to be covering today, I'm just kind of be myself, and I'm just going to break off into all the examples I kind of prepared for today, as well as just all the little topics I'm going to kind of break off into. So as well as all that little sheet I sent before on the first video, it kind of shows all my notes of everything I'm looking at right now. So yes, these are all the topics I'm going to be covering. No, they won't. Not each of one of them will have each of their section, like volume and all those other stuff. Like that'll all kind of be covered in each section as I'm covering it. So if you have any questions about this, please feel free to drop them into the comments as well. But I'll try and hammer over everything as best as I can. So I just kind of wanted to hammer over some first. Just a few examples of something I just recently shared in my community was just a couple trades here on Amazon and Peloton that we took. So here on Amazon, this was the watch list levels. So preparing how we trade, I set up the levels, I posted the list, and we were watching above 34, 52, 65 for calls. So you could see the 40% entry was given here above our given level. And then price ended moving. We also had a good above average volume and good rising buyer volume. So this is just kind of a little gist of how to show you guys how we trade here in Beeler Buys. So that's just kind of the basics so far. Let me show you guys the next one. So as the day moves on, we like to mark our new high of day, mark more emerging candles, and we like to mark the 50% level of the breakout to the high of day. So we would of course mark from here to here with our fib and get about the halfway point, mark our new high of day, that level there, and then more emerging candles, just the tops of our buyers. If you're not familiar with what that is, please check out the TA routine. But let's move on to the next one. So here we have lowering price to known level after high of day. So after that high of day was marked, we had dropping sellers. Well, we had lowering volume as well, so that's really good, showing good support catch most likely. Next few candles pop up, we just have slow buildup of buyers, another reset candle, and another break above average volume with buyers. So very good sign so far. You can see as we did that was an 80% entry. Moving back up, we have another 40% entry to another 80% entry, holding the 50% of that breakout. Very, very good sign, of course, when you see the 50% of any move held. And of course, you could check these out in our previous videos. But as you can see here in my other notes, buyer interest appeared over high of day with volume. Lowering sellers again, just not lowering in the sense of directly one after another. It's lowering perfectly. That's not always going to be perfect. If it's like that, awesome. But as you can see, just relatively lower, as you can see in this example. So, and then right after, rising buyers again for more price rally. So you can see they had some fuel there to push up with the rising volume. Here on Peloton, you could see the break below my set level on the watch list, but you could see the weakness in weakness in sellers, though weakness in buyers up here as price was rejecting the first target, as price was looking to drop further. You could see, yes, there was a fight here, but you could see sellers are definitely still in control, as well as indicating with this rising seller volume right beforehand. So you could see sellers are in control. A battle goes on. Sellers are still in control. Okay, so that's what you're seeing right there on price. Let's see, do you see that on volume? So sellers in control. Kind of a fight here, sellers in control again. Not an amazing amount of strength though, okay, but we'll see that on the next one. Weakness in sellers towards the known price target. Time to exit. There's not enough signs for strengths for more. So what I mean by that is, yes, it looked good to go down to our 120 here, but as you can see, there was definitely signs showing you that it was time to get out of the trade or don't get into the trade for more of a drop. It's definitely not going to keep dropping. Give it a little bit more time to build up more signs, because you could see the indications here. So yeah, you had the rising seller volume, then you had the battle, but then you have more sellers step in. So that's what I mean by, yes, sellers are still in control, but not with an amazing amount of strength. So of course, after you took your 40% entry below our watch list level, of course you'd be taking that. Of course, you'd be taking your profits before it even started settling, because of course you're trading the momentum of your time decaying asset, the contract you're trading, an options contract. So just kind of give you guys a little gist of how we trade in here, and what all this, what I just showed you all, is just the BB system. The BB system is basically using the pre-market high, the pre-market low, and previous day price action information. So a big thing with how we trade, and let me just zoom in on these 2 days here so you can see exactly what you're going to be looking for. So a big way with how we trade, just to give you another quick basic rundown, is we mark the previous day high, the previous day low, we mark our pre-market high and our pre-market low. Okay, there's also a few other levels you can mark. You got your previous day close, so you can see price ended up closing about right there, and then we also had price open right here. So those are a couple other levels you can mark. Of course, you don't need that in every scenario. You can see right here in this example, you didn't actually need that. But as you can see price did hold the range here on the previous day. And you can see we are still trading within it. So what that is just basically a squeeze is what you're seeing, is price trade inside of itself. Okay, that's all you're really seeing right here. So between these levels that we day trade with, and these are very, very effective and high probability day trading levels, we look for calls above the pre-market highs. So above our top levels, we look for calls, and below our bottom levels, we look for puts. So if we would have taken price under this pre-market and under the previous day low, puts would have been looking really, really good out of this range. Could have dropped a good exceptional amount for us to make a good amount of profit on that options contract. But as you can see, price rallied, made another higher low, another higher low, another higher low. Price ended up rallying, and you get a good spike in volume, but also at a good spot. Again, just like pattern trading, I always tell you guys, you don't just want to find a bullish engulfing randomly. You want to find at the bottom of a trend where it has even higher probability to have a good explosion above it, right? So that's what the same exact scenario you'd be looking for right here. You'd be looking for good rising buyer interest above a good spot. So now we know that this is a good spot. Now we're looking for good rising buyer interest above it. So you end up getting that here above the rising average volume, as well as rising buyer back to back to back above the level here. So very good interest of buyers as it breaks that level and holds over. So of course you can be looking for calls on that. But that is basically how we trade in this chat. That is basically how we day trade and scalp a lot of the time. And this is the 5-minute chart. I'm personally a 10-minute trader. There's a lot of guys in this chat that are a 1-minute trader, 1-minute scalper. And the cool thing about this system is we can all do the same thing. So let's look at it like this. There's the last 2 days, right? Last 2 days. Let's mark the high. Let's mark the low. Let's mark our pre-market high. Let's mark our pre-market low. Okay, so we got everything set about everything that we need set. Of course, there's more to tie into this later on that I'll show you guys in this video. But for the main example, though, as you can see, there's multiple day trading opportunities here. So yes, there are people who can take puts as it's breaking a level and hold it for a long period of time. There's people who can take a trade from here to here in just a couple minutes. So as you can see, there's going to be a lot of different trade opportunities using this kind of system. So of course, it doesn't matter if you're just a scalper or a day trader. I think everybody can benefit from this type of price action. So I hope you guys enjoy this video. Please leave a like and comment on it, and I'll get into the next section. Alright, so now that we've kind of gotten past the basics of how we day trade and how we find our levels and what we're really looking for when we're getting into this, and now we can get into the types of entries. So we have two types of entries that we cover in my community, and that's the 40% entry and the 80% entry. And what that is just levels of confidence. That isn't profit percentages or anything. Just levels of confidence. Levels of confidence. So the 40% entry confidence, as you can see, is when price passes by a level or breaks the pre-market level and the movement is accompanied by a rise in volume. So that's what you were seeing when I was showing you those couple examples of price breaking but also at a good position. Then the 80% confident entry is when price has already passed the pre-market level and comes back to retest the level and to confirm it is now being used in this case as resistance. That retest of that level with rising volume or continued control in price is where our patient plays pay. The patient play is where we often see a dramatic one-directional move away from the pre-market level. Often that level of confirmation move defines the majority of the direction for the day and is continued. So as you can see in this example, and this is from the guide, just from one of the guides that I've made in the past. So a little outdated, but still very, very gold, as you can see. But As you can see, price ended up breaking down and have our first initial level, so kind of a riskier level to play from. Yes, you can get profits from it, so you kind of have to just be a little quicker with it. You don't always want to be patiently sitting on this. And then, of course, you have your more controlled area of price where you get that retest of price, where price is definitely in control by sellers here just because of the positioning of where it's at. So good little breakdown of the types of entries we trade with this system and how we day trade in this community. But let's get into a couple of examples of both here. So I ended up getting a couple here before I made this video. So a couple little examples here I'm going to do here are, let's start with SKLZ. So on SKLZ, you can see just in the past 2 days using the previous day high and previous day low and pre-market high. Didn't even mark the pre-market low just because it's really only right there. So might as well just wait, go ahead and wait for the more patient level here at the previous day low. So ended up seeing both examples. So as you can see, yes, we broke the pre-market low and we broke the previous day low with a 40% entry, but you also have that retest of where it was really just relatively lower volume and price was still in control by sellers. So yes, you ended up getting price closing over this level, but I mean, look at the volume. It was just so weak, relatively low. No one's really interested in it right here. And then you end up getting a rise in sellers right after. So price ends up tanking that new low of day. And you can see price ends up cascading just slowly over time to make a newer low to the 1940s. But as you can see, though, both types of entry. So you have your 40% entry, breaking the pre-market low and previous day low. And then you have your 80% entry, where price slowly had a battle and ended up retesting, showing double confirmation that sellers are definitely in control here. So just good little basic example here on SKLZ. We can move on to and see on the BLNK chart. BLNK ended up giving a just 40, and this is another thing too, you're not always going to get that retest. So big thing here is just not being greedy. A big thing I teach my chat is the staircase method. The big staircase method is just really for a few months and really just a few years even, you should take just that initial breakout to that first target. So, your first trade, for a while should just be, let me get that breakout, and then I'll take it to that first few levels of, wherever your targets are going to be at. We'll get into that as well. And then you'll just take profit. Don't be too greedy. Just get in, get out. But you have reasoning behind everything. So that's kind of why it builds you up over time. It doesn't just build your trading confidence, but also builds your trading knowledge. And also your account. So that's another cool thing. But as you can see here on BLNK, a very good rise in seller interest here as price was holding under the previous day low and pre-market low. So double interest there, really triple confirmation right there by the volume and the two levels that it has broken and closed under in just one candle. So very, very big move there. And as you can see, just slowly cascade over time. You didn't even get that retest back up here to go over or anything. You didn't even get a slowly pick up to make a lower high or anything. It just stayed down. So very nice example there on BLNK. And then the next little example here is on CLSK. I think this one has both as well. Yep, it does. So, and as you can see, utilizing multiple days, I marked this day here just to get another level ahead of me. Ended up marking my previous day high, my previous day low, and then my pre-market system, as you can see here. So let's just zoom in right here. As you can see, price did end up dropping after the first 30 minutes down below pre-market low and held that previous day low. So yes, a good scalping opportunity here, I'm sure, on the 5-minute time frame, even the 1-minute time frame, from here to here, but really nothing else besides that. The bigger example I wanted to show here was the fact that price held support. You got a relatively lower volume. There isn't really a crazy amount of volume here at open. So nothing crazy. You don't expect sellers to take that lower. You do see it make a new low, and you do see it pick up over average volume, but again, relatively lower volume. Look over here to the right. When the buyers end up taking it back up, and another thing, this is a good 80% entry, yes, as it's holding the previous day low with this very big bullish candle. Another big tip, though, is that control point. What was the control point of this high to the low of that day? So let's mark that 50% level. So let's look for a candle to close over that 50% candle, okay, over that 50% level. So let's make it orange so we know it's a little more important. Okay, price ends up closing over it. You get more rising buyer volume, and so also over average volume, but two, look where it closed, back in pre-market. So you're almost 50-50 again. You're almost back to square one. Square one again. Price ends up pushing back up, 40% entry on breaking out for calls, okay? You end up not getting a retest at all, except for way up here when it does a little continuation. And again, though, what's another tip you can see for that continuation if you don't get that retest? That 50% control point. So end up marking that. And look where price ended up holding. you could see price, I'm making it orange just so we all remember it's a control point. You could see price ended up holding that as a support, relatively lower volume. Now, what I mean by relatively lower is there's a big profit taking right here, but nothing really happened, so not a big candle happened. It should be in correlation with this. If you saw workshop video number 4 with JBake, you would know that this candle should be as big as that. If it isn't, it definitely has some significance to it. Next candle, lower, lower, still holding, still holding. Next candle, rising buyer. Price is still wanting to increase. So you can see even over that, and that's why I marked that other day high. So you could see on that target there. So even if you were to take profits there, or you weren't, you were looking for another re-entry, you could see there's still good buyer interest here above that level. So ends up taking it just a little bit higher, but very good example on both types of entries there. Yes, it didn't give us that 80% entry, but you could see how that concept would work right here. Also, if you're not, if you're like me and you want that double confirmation, you can use those orange levels like I found, utilizing the 50% control points. So definitely check that out if you haven't checked it out in our community. Very big channel on that. So here's a couple examples though of what I was looking at. Another one I wanted to show you guys was Fubo. So here on Fubo, you have the previous day high, previous day low, pre-market high, pre-market low. So we got everything we need. Let's zoom in. Price ends up dropping after the first 30 minutes through both of those levels. So now we're looking really good, and it was a big increase in sellers. So, how is this playable? How could we have played this? Definitely on close of this candle, because if you would have been at the close of this candle, it would really feel like you're chasing just because of how much volume has already pushed through and what levels it has moved down to. Okay, so it's already dropped, let's see, so from 30, 50 down to 20, it's already dropped over $1.50. That's very, very big for a stock like this. It's only a $30 stock, so you can't really expect it to squeeze out a lot more than that. So really all you can do, and if you didn't get that 40% entry, is of course mark your new low of day, and then if you were to get any kind of seller increase through that level, then yes, you could play it again. If not, then of course you just wait and be a little more patient for the next day. So yes, you can mark these levels for the next day. So now we know for Tuesday, I guess, for Fubo, above 30.20s, below 29.25 is going to be looking really, really good for the next day's day trading levels. So there you go. Already seeing an example of utilizing your price information that you have from whatever day you day traded on it for the future. So now I know for the future that those two levels are really good. So that's another good topic I'm going to get into next, is really utilizing the levels you have already. So when days don't go so well, when days just kind of range trade, I'm going to get into that next. But a really big thing with that is just setting the levels, being patient. If you're someone who needs to set an alert because you have kids or have a job or just crazy stuff going on with life, you need to set alerts on your chart and you need to go take care of whatever you're getting. So hope this section was helpful, just going through these couple of examples, but I'm going to get into a couple more here in a second. So thank you, and let's get into those. So a big question that I get asked a lot around chat, and just people not from my chat, and generally just from YouTube or Instagram or Twitter, people ask me, what do you do if a stock doesn't break your range for the day? And I tell them, tough luck, whatever, it doesn't matter for that day. So I went back and I found some recent examples, and I want to show you guys what I do when that happens. So a really big thing to note is, what levels did they stay in between. So as you can see here, I marked the pre-market high, the pre-market low, and my previous day high. So and my previous day low. So you can see price did just kind of range trade. Nothing really exciting happened. What can I do for Facebook though going into the future? Now I know this is a really good break above, so I'm going to adjust this a little, make it a little more cleaner. Let's adjust it to that high of day, meat of the bone. So now we know above 356, calls are going to be looking good. Below, and let's make this a little cleaner, just like I did at the top, make it a little cleaner. Below 352, let's just say 85, puts are going to be looking really good. So now we have a good day trade plan for the next day. So no, nothing happened, but what are we going to mark it as? Void. Nothing has happened to it today, but it's not like the value of this play or the significance behind these levels has just vanished. This is still a really good play we can take advantage of. We just have to be a little patient. So going into Tuesday, now I know above 356 this is going to be looking good for calls, and below 352.85 is going to be looking really good for puts. Utilizing my previous day levels still, I'm not going to erase any of them. There's no need to. So set your day trade plan. So let's type it up, above 356, below 352.85. So now I know going into tomorrow that these were the levels before pre-market showed up. So depending on where this ends up tomorrow, we're going to be utilizing those levels. Let's go look at another example that's pretty recent. NVIDIA utilizing just the BB system, also marking gap ranges. Let's mark that gap range. You can see price really just range traded between the pre-market low and the pre-market high, as well as just kind of fighting around and jump roping with the previous day high. So you can really see, just kind of range traded. What can we do now? Let's make our levels a little prettier, which I don't really need to on this one, and we'll adjust our plan. So now we know above 820s is going to be looking really good, and below 811s is going to be looking really good. So let's set our day trade plan. So now we have our day trade plan. We don't have to worry about that. So yeah, it does kind of suck when things don't go your way. You don't get to day trade them. But a big thing, of course, is marking your squeezes that happen between each day, marking your new high of day, your new low of day, and appreciating the levels that you already have. That just because this range traded between here doesn't mean these levels suck. No, these levels are still amazing, and we're going to utilize them still. So you'll see this at chart again when I'm talking about all-time high charting, but I really just wanted to give a good section on range trade breakouts. So yes, it sucks that it didn't work out for you that first day, but you still have these levels. These levels are still good. So think of it as kind of a bonus for the next time you're making your list. So now you can add on Facebook and NVIDIA just based off the fact that they range traded and were a void between your levels from a previous day that you were looking at them. So, they might have sucked in, but they're still good for future opportunities. So definitely don't give up on them. But I just wanted to give a little couple-minute breakdown on that. These were really only the two examples I went out and found, but that's not the point. There's plenty of examples you'll see here as I'm going through, in which, the day was boring, but that boring day led to an exciting day. I'm sure I could find plenty of them, but that's not the point though. But again, marking those boring days and utilizing for when another day happens, because then you're going to be, oh wow, I'm really glad I left those levels on there. That wasn't, it's not just luck, it's reasoning. You're still utilizing reasoning and things you prepared for, because the trade itself should be effortless. But the preparation behind it is truly where you are putting all the hard work, all of your mental stability behind, all of your confidence behind the trade. All of it should be in the preparation, not actually when you're clicking enter or exit. Entering and exiting should literally just be effortless. So hopefully this part is kind of helpful, but we're going to get into some more pre-market high and pre-market low breakouts. Alright, so for this part, I'm just going to cover pre-market high breakouts. I'm just going to cover two charts that I've recently traded and have also gotten to really just break down a lot more for the chat. So it's really helpful to take from a live experience instead of taking from something I didn't actually do. So that's what you're seeing today in most of my videos. I'm taking from live examples from either a past trade, a trade that I had a friend do, something I can actually take off from. It's kind of hard to go just be Captain Hindsight all the time. Visualizing is a big thing, but Captain Hindsight can only go so far, I guess. So again, here, let's just talk about the pre-market high breakouts. So what do we have to mark? So let's mark our our pre-market low, our pre-market high, our previous day high, and our previous day low. So we have our main four levels marked. Let's see. And again, this is really good for review. it doesn't matter if I profited from this or lost on this chart. What matters is that I'm able to go back and visualize and review, what happened, what kind of trades happened here. What kind of entries happened, I guess, is what you should go highlight. So breakout, we have buyer interest. It's a good 40% breakout. Maybe a little risky just because it's the first 10 minutes of the day, so maybe I probably wouldn't have taken that. We ended up taking the 80% entry, but I'm just kind of revisualizing. This is how you talk to yourself, really. Look at the chart and visualize, what entries are here. How could I have taken this? Should I have marked my new high of day? So let's see. Let's visualize it. Above the pre-market high, very nice breakout. Price pushes up, and that's why it's a 40% entry. You can't expect it to always just rally the rest of the day. Sometimes it's just going to have that quick pop, drop down, then you get that retest. So always awesome to take profits, scale out when you do get that. But either way, mark your new high of day. Price ends up dropping back down. What kind of volume is there? Price is dropping, and you have relatively lowering volume. So very nice to see as you get a good 40% entry dropping to the support here, and then you get a good pop in buyers. And again, you're not always going to get like a huge pop to give you an easier signal like, yo, get in, it's an 80% entry. It really is a build-up phase. So sellers are always quicker, buyers are always building up. So you always have to kind of go back through and visualize. And that's what this reviewing and visualizing is for. So let's look at the volume. Relatively low volume all the way through. But what were the candlesticks doing? Okay, price ended up holding there, pushing above here, pushing up again. So let's see, that 50% control point I was just marking? Let's say the 50% is about right there. It's about halfway of that candle. That's where price ended up holding. It's very nice to see as the relatively lower volume is building. So buyers are technically winning. It might not be by a lot and it might not be crazy, but that's what I just said. Buyers are slower. They're going to build up. So buyers end up taking it. Price over the new level, new high of day. That's why you mark that high of day. Price ends up breaking over, and you get your rise in buyer volume. So rise in price, rise in volume. Very nice to see. As you can see, price ends up pushing over, holding again another midpoint, pushing over again. So very, very slow buildup going into the rest of the day. But as you can see, it's very, very hard to see these things, see these kinds of things if you don't go back and visualize, go back and talk to yourself, go back and review the chart, or else you're not going to be able to do this for the next time around. So a big thing is not just marking these levels, but going back and reviewing them. A lot of the time I tell my team to hold themselves accountable. So if I would have set these levels, and let's say, regardless if I traded or not, end of day, I need to go back and review the price action so I can visualize it for the next time. So let's say I did take the trade, which we did. We took 80% entry off of this pre-market high bounce because we weren't really warm with this one. It's a little too early for our blood. Price ended up dropping back down, relatively lower. We said, we'll take the risk. If price ends up dropping back below this 138.35, we'll cut our losses. So very big example there is utilizing this pre-market high breakout also as a stop loss. So if price was to drop lower, that's where we would have cut it. I would have not taken it bigger than 5, 6, 7% L on that. Price ended up pushing up though, and we ended up taking a very nice gain on that up to the 140s. But as you can see, utilizing your levels for multiple reasons. I entered that as my kind of more safe entry because I didn't like how early it was, and then I also utilized this as my stop loss in case price did become weaker and just drop below. So we would have taken that back and just waited, waited for another trade opportunity. But let's go into the next one. Amazon was the next one here. As you saw that on Apple, let's look at it on Amazon now. So big thing here is not just pre-market high breakout, but also utilizing those previous day price histories. So as you can see, yes, we have a good previous day breakout right here and right here. But we also have our 2 day ago high that is inside of this, so we can still utilize our price history. So just like we covered on those range trade charts, you can see it here on Amazon. So let's mark our new high and lows, and let's look at just the previous day, or I'm sorry, just that last day. So as you can see, range trade inside of that, relatively low volume, nothing too crazy. No one's really dominating, nothing's too crazy yet. We haven't had a candle close under or over. Price ends up breaking out. Who ends up picking up an interest? Buyers. Okay, so good 40% entry. Not really an 80% entry. The only really 80% entry was about this candle right here. So very, very quick 80% entry. Price ends up pushing up. Relatively lowering volume, I should say, as it broke above that level. So you can see it broke up, and then you can see price kind of lowered, and then it becomes relatively lower again across another couple candles. That's what you want to see, that retest. So no, you didn't get the retest here like you would have wanted. Price come back up and then down and give you this 80% entry to give you an easier, more safe signal. But it ended up doing it way up here. So not where you would have wanted it, but what is that level? That was that 2 day ago high. So utilizing recent price history again with volume to help us navigate through this chart. So very, very good. Lowering volume, lowering seller to support, and buyer breakout back above. And again, mark that new high of day so you have double confirmation. Price just kind of jumped roped here after it broke out right here, right? So it really needs to hold the 50% of this candle and then double confirm over this high of day. What did price end up doing? Jump roping, holding this level for one, and then two, closing over this level here with, guess what? Rising buyer interest. So as you can see, multiple confirmations with just price action. So very awesome example here on Amazon. And on these next few examples, I'm going to be getting into pre-market low breakouts and just the same thing as this, but for the other side. So let's get into that. This example might look a little familiar, and it was the exact example we used in the beginning slides when I was kind of breaking down just the basics of the types of entries and what this system is, and really just the basics of how we trade in this community for day trading and scalping. But I wanted to cover over it again just because it was a really, really good example, and it covers the basics of really trading the break belows. So even if you didn't take this trade opportunity, so let's just delete this like we covered in chat. A big thing to cover here when reviewing this chart, just like you saw me cover on the last two charts on Apple and Amazon, was the break below the pre-market low. So you have our break below here. But what kind of price action is going here? So you had your candle close, and then you had two candles in which I almost promise a lot of you do these kind of trades every week too, and a lot of you guys send me this stuff. You're like, well, I entered here, and then I didn't like that price pulled up. But what about candle closing, guys? Candle never closed above this level, so sellers are still in control. And what did you have go over this level? Just wicks, continuation doji, and then a good size looking hammer going on the downside. So, think of this as an ice cream cone. If you were to grab this as, the cone, you flip it upside down, then it'd be going down more. So, very nice to see. If you were to flip your ice cream, you don't want your ice cream to fall on the ground, so of course you're going to flip it, so price is still looking good on the downside, but doesn't look amazing. And that's why I use this as an example earlier, is because it was a really, really good example on not just what is a good break below, but it also covers, what is a good sign in weakness at a level, which is those wicks for one, and then two, you didn't have an amazing strength when it did keep dropping. So yes, it did drop after it broke this level, and you would have profited in this trade down to this 120s, but you could see relatively lowering volume as it did keep breaking lower. So you kind of had this battle here with these reset candles after you had your rising sellers. So rising sellers, reset candles, sign of weakness in sellers. So yes, your puts are still looking good, but you should probably start taking profits as it's approaching those lower levels, just because the momentum of that is going to start flipping back. Not even because it hasn't broken lower, just because it's the buyers are holding it up a little higher each time. So you saw how it dropped here, dropped down here, then they picked it up, dropped down here, then they picked it up, dropped down here, then they picked it up again. So you could see it's just slowing up the momentum. So again, utilizing volume to help you on those on those day trades, but also for your review. So let's get into the other chart I prepared, which was Boeing. Boeing is a big favorite for a lot of people. So I'm going to break it down on 2 time frames. So first, on the smaller time frame, on the 10-minute, you have it here, your pre-market high, your previous day levels, all that good stuff. But as you can see, first candle was everything, so this was definitely a scalper's paradise, but you could see the slow buildup in buyers. So lowering buyer volume as it took it to this level, so you could definitely assume a slowdown is going to happen just from those two. And then guess what? A slowdown is happening, so you're going to definitely want to remarking your new low and high of day. Remark those new moves as it approaches to the right of the screen. And you can see just the rest of the day, it really just range traded. But let's see this on the 5-minute and see how you could have scalped it. So big trade here was below pre-market low, was on this candle. But let's, of course, wait another 5 minutes. Why not? Break below again. Candle closed here. So yes, looking very good as it closed, not just below that, but also a good previous day level. Price ends up dropping even more. Yes, of course, you're going to be looking to take profits the first 15 minutes of the day. You definitely want to be looking to take your profits a lot quicker on these earlier morning sessions, just because these are times of very high volatility, and you're not going to really have a good sense of direction this quick. So this is why I talk about the staircase method so much. So yes, in this trade you would have been profitable, but why the staircase method is so crucial is because it teaches you to not be so greedy. So if you're going to be a scalper, you're someone who wants to take profits quick, you need to be thinking no hesitation, no greed. Those are the 2 biggest rules in your rule book. So why I say it like that is because if you were to get into this trade and just hold forever, you would have been screwed as price picked back up on the first few candles, not even as it approached here. So let's say you entered here. You would have been screwed as it was picking up here, just because the momentum of your time decaying asset options contract is what's burning, not the stock price. You're not trading the stock price. You're not trading your profit loss gain of your account. You are trading that options contract. So of course you need to be taking profit as it's at its highest momentum. So as price was dropping down here, you should have been taking profits before this candle even closed. You should have been taking profits. So really big drop there from pre-markets down to those previous day levels. But that was just a really big thing I wanted to cover. Just because there is a difference between day trading and scalping. Day trading is a little bit slower of a method. You're looking to build into positions, scale out of positions. As a scalper, you're looking to get in, get out. There is no hesitation, and there shouldn't be greed. Those are your 2 biggest enemies, is yourself, the greed, and of course the hesitation. So That's why the reviewing is so big, because then you'll be able to visualize it more in real time as it hits you, and you won't be freaking out in the middle of a trade, because you already need to have all this prepared. And that is why this system is so amazing. You already have all the levels on the screen before the day has even begun. You just have to make the emotional battle of waiting for things to close, navigating, watching your volume, monitoring how things are closing, where on your chart, is it rising volume past a certain level, so always notate that. But I hope these pre-market low breakouts and these, momentum discussions kind of help you out. But let's get into the next part. So this little part here, and this isn't going to be like the craziest longest of parts, is just stop loss talk. Using other levels to help you stop out of a play. So a lot of people have a really big problem with this from an emotional standpoint, and that's one problem. But another people just have a problem visualizing it just in general. So that's something I want to help discuss today, is how to actually, use your levels to help you. So, think about it from just a basic standpoint. If you were utilizing a pre-market high to play calls, and let's say whatever happens, just like this chart in here on pins, let's say whatever happens doesn't work out, it fakes out, you were wrong, you were greedy, whatever the problem was, what is a good sign that you need to be out of that trade when price doesn't hold that pre-market high? So where should you have been taking, cutting your losses? A lot of people are like, well, I'd be cutting my losses when it breaks the pre-market system. Why would you wait that long though? You need to be out of this trade already. It didn't hold your trade. So let's say you were just in this, you were really excited, you were in it the first 10 minutes of the day, you like this big breakout of buyers, and you like that it held over that level in the first 10 minutes. Okay, next candle. Price ends up holding down lower. Yes, you should be out of this before this candle closes, just based off the fact of how far it ended up dropping down. Okay, so that's one thing. But just from a more emotional standpoint, because that does sound a little bit emotional, like you should just sell it because it's dropping too quick. No, a big thing you can do is wait on the candle close. So where should you be waiting to cut this? If this doesn't hold, based off of the fact you were waiting for it to break above this level and this level, those should also be the two levels you cut from. So let's say you're more of a scalper, you don't like that it didn't hold instantly, you need to be cutting here. Okay, let's say you're more of a day trader, you were more waiting for the build up for it, and you see it didn't hold that previous day high. This isn't a bullish breakout anymore. This is back to square one. You need to be cutting here. So this is really, really big with where you should cut, but not just randomly, with reasoning. So you can see with reasoning, you should be able to cut at a very good spot and also not lose most of your portfolio. So you shouldn't be using more than 10 or 15% of your account on these trades. So when you are taking these tiny losses, you're not really denting yourself. You're kind of still taking a loss, yes, but you're learning from it, and it doesn't feel as much of a loss as much so as a lesson. So let's check out one more example here on Snap. Pins is a really good example we saw last week, and just like you see here on Snap, utilizing my BB system here, utilizing the previous day and pre-market system, you can see price did just range trade in here, but also after price broke out above this right here, let's say you were excited, you liked it, that it looked good for calls, price ended up coming back down and holding under here. Yes, you should be out of that trade based off of your trade plan. If your trade plan was that it hold that pre-market high, based off your trade plan, yes, you shouldn't be in that trade anymore. Okay, next thing pops up, price comes back up, makes a lower high. Okay, so you have your high of day, and now you have your lower high. So that is bearish from an intraday standpoint. Okay, let's check out the other side now. So from pre-market here, yes, you've made a higher low, but also just from here to here, you've made a higher low. So that is bullish. But right now, just like I covered earlier, you're squeezing. So don't take each trade just because of where it closes and all of that stuff. Focus on the momentum, focus on what the level is. And sometimes that's why you'll see me use those more passive levels. Yes, price ended up starting above this level and closing above it, but you really have this level to worry about also. You can't ignore that fact. So yes, it looks good here, but you have to realize, yes, this is where the bigger breakout will happen. So of course, sometimes you want to be a little more patient, and on some charts, instead of just getting in on the very first trade opportunity, like you see me keep showing you guys, you should just be a little more patient and wait those first 30 minutes, first hour, 15 minutes or so. Sometimes you do that and those squeezes end up panning back out. So if I was extending these to the right, where was the trade? The trade was really way over here towards the end of the day, the last 2 hours of the day. Let's check that out. Price ended up breaking out of this squeeze with rising buyer interest. As you can see, most of this day, since this really hit up here at this high of day, you've really just had lowering volume, and then you've really had more lowering volume towards this lunchtime, which is pretty normal to see it under the average volume line. You should always see this up, this kind of down, and this up. So you should be looking for trade opportunities there. So what do we see here after squeezing those lines together? After seeing price trade within itself, a true squeeze, you get rising buyer volume, above average volume, and you're out of that squeeze. So now you're looking good for calls to that previous day high. So your entire trade plan is now this entire rectangle from here to here. You're not looking for this to confirm higher and go up $10 more. Again, like the staircase method suggests, stop being greedy, don't be emotional, don't hesitate. This would go under the don't be greedy scenario. Don't be looking to make another $10 move after this has already been squeezing for this long, after lunchtime, and you're finally getting a good trading opportunity. So again, utilizing your intraday tactics, how to navigate through your price action. And this entire video, you guys have not seen me put on a single indicator. I have literally used 0 indicators this entire video just to manage how to navigate through this price action and how we trade, how we enter, how we exit, what we're looking for, what is a sign of weakness, what is a sign of strength. Answer those questions for yourself in your head tonight or whenever you're watching this video, and really break that down for yourself. Go back through a couple charts, rewatch this video, and visualize everything you possibly can utilizing this information. So please do that. But let's get into the next section. I'm only going to cover a couple more things, in which are the how to chart all-time highs. I want to cover moves over the previous day close, and I want to cover the daily time frame gap strat, and then also the TA routine, in which will help you with other levels that this system cannot. So this is giving me almost everything I need, but there's another system around this in which I can add everything else I will need. So let's get into that. So the next section I kind of want to cover on is the red to green or green to red moves over the previous day close. And what I mean by this is after some time has gone by during the day, or after the initial volatility of the morning price action has moved on, at least, you can really focus on that previous day close. This is something I like to just at least note when I'm looking at stuff like this. So if you ever have a heavy amount of price action, so let's mark that previous day close. That would be about right there. Actually, no, I'm wrong. It'd be about right there. Sorry, just a couple cents off. But as you can see, price ended up dropping from this level and holding, guess what? Our previous day low. Let's mark our other pre-market system levels while we're at it. As you can see, it's just kind of in the same vicinity on this chart here on Disney. But again, utilizing another level that you can have before the day has even begun is a huge advantage. So what is another level you guys can use? So let's mark up some of the abbreviations you guys can use for these. So we have our pre-market high, our pre-market low, our previous day high, our previous day low. I'm just marking this out so everybody has them as well. And then the two levels that I'm going to cover now are, and I really covered them on like a bunch of charts, I just wanted to make them more aware for everybody, is also the previous day open and the previous day close. The previous day close is one of my favorite levels to look at once some more time has gone by. A lot of the time you can trust this level to hold and give you really good confirmation after, let's say a big morning has just crapped the bed for Disney, ends up dropping below, previous day of close, ends up just tanking super hard. A big thing I like to use besides those control points is also the previous day close for a move above it. And again, I'm not looking for a big 50% move, 40% move, 30% move or anything like that. Again, from a scalper's point of view, we are just looking for a quick pop over this level to another known level. So just in this example, you have your previous day close, when it ended up dropping below your previous day close, and as well as your pre-market system, where did it end up going towards? It ended up going towards your pre-market, not just your previous day low, but that's also your open for the yesterday, so that double adds on to that level. This being around the previous day high and pre-market high and low makes this level more significant. This adds on to it. this right here adds on to it, so don't think of it as taking away from the level, like, oh, well, it's not the close, it's the pre-market low. I'm not focused on the close right here, I'm focused on this. You're just adding on to it. That's okay. That's amazing. You just made this little area a little better. If now we know if price leaves this area, it's definitely looking to go towards that, previous day open, previous day low, and lower previous day history levels. So that's what we'd be looking for. But again, we're not looking to be fortune tellers or anything, or tell the future, or be Marty McFly. We're just looking to be able to point out what the highest probability move would be. So of course, if price held under all these levels, you're going to be looking for it to go towards that previous day close. I mean previous day low. Sorry. Price bounces off of this. You're going to be looking for it to not just confirm towards these levels. You want to see it retain this low that it made earlier, as well as return back to the levels in which it dropped from. So yes, Disney really didn't do anything all day, but really it did do something. It made a new low. But, you wouldn't be able to know that if you just looked at it on the daily time frame. So, being able to go back through this and review it and break it down a little more is very, very helpful. But these are just a couple little notes I wanted to add on to this that I didn't really break down more on those other charts when I was looking at them. But the previous day open, the previous day close, these are really, really big. If you see them add up together, don't think of them as taking away. Think of them as adding together, giving more confidence behind that level. It has more crucialness to that level. It's more effective. So definitely mark all that up, and I'll see you guys in the next section. All right, so for these next 3 sections, I'm going to be covering how to chart at all-time highs, the daily time frame gap strat, and then the using bigger time frames to help you on smaller time frame section with the TA routine. So the rest of this will be bigger time frame analysis. So if you weren't but again, all of this is very, very helpful for day trading and scalping. But a big part I get asked, a big question I get asked is, how do you chart at all-time highs? And, people always end up joining my chat and they end up learning about these psychological levels and stuff, and the control points and gaps and all this other stuff. And, a big thing with how we chart is those psychological levels, and people think those are just made up or we're making them up. No, they are really big, and bigger money also pay attention to them. When we are moving higher, do you think it is just a coincidence in which price action stops at a flat number? You seeing it stop at 820.50 or at 1,000 flat, 3,000 flat. It's not a coincidence. It is a definite, I guess you could say, thing, quotation. But yes, you're not crazy when you see that it's levels of psychology when you were witnessing that. So, a big chart I want to cover it on with is NVIDIA. A lot of people ask me, where do you see NVIDIA going with that split news? And whenever it was around the 600, 650s, I was saying, well, think of the next crazy number you can think of, and that's probably it. A lot of people said, so 700, 750, 800. Yes, you are all correct. Those are all correct numbers. Definitely don't be thinking, after it broke above this level here, where is it going? What are the next levels above 645? You have 650, 675, 700. 725, 720, 730, 735, 740, so on and so on. So please mark these levels of psychology, not with the belief of, oh, this is definitely where it's going. This is giving you kind of somewhere to poke in front of you in the dark. You don't just want to walk into a wall. You want to have a stick in front of you so you can kind of hit the wall before you run into it and smack your head on it. But as you can see in this example, that's all this is. I'm not saying this is definitely where NVIDIA is going. It's definitely going to 1,000. No, we were just saying, 700, 750, 800. These are levels you can expect to be hit over time. After a stock like NVIDIA gets some split news, some good catalysts like that, that is definitely some good push to it. But I don't want to give you guys the false sense of you should just start charting randomly. A lot of people like Fibonacci extensions, Elliott waves, all these other cool things. Something that actually works for me are these levels of psychology. So if you're ever at a point on like let's say it's AMD and it's at 90, you're going to be looking at 95, 96, 97, 98, 100, 100, 250, 105, 107.50, 110. You're going to be looking at those flat levels. But as you can see here on NVIDIA, marking those levels, you can even go back and visualize these levels. I know I didn't perfectly mark them or anything, but just looking at the levels of psychology, you can actually see the staircase movement up from them. So let's look just on this uptrend, what's actually going on up here. Price is moving up, staircased, held above that level, pushed up, staircased, held above that level, pushed up, staircased, held above that level, moved up. Again, it didn't even staircase this time, it just kept going. But as you can see, it is utilizing those levels of psychology to do so. So let's go back and look at one of my favorites. Let's go look at Tesla. So Tesla is known for running, very crazy amounts. A while back, I was covering a video when it was at 2,000, and then it had the split. Now you can see it's at 900. But what's going to happen next time when price ends up rallying and pushes back over the 900s? What am I going to be looking at? Well, for one, the breakout is going to happen at the top of the emerging candle from the left side. So whatever this level is, if it'll let me, right here. 880 50s is really where it's going to be breaking out. 900s is where I would target, but you can see I've already found a good $20 scalp on the daily time frame just from the meat of the bone to the actual all-time high. So I have a good 40% entry above this 880 in the future to be looking for, with double confirmation and a good first target to scale out at for a good second breakout above that 900.40. But what are my levels going to be above that? Personally, knowing Tesla, I would do every 20, 25 bucks. So let's do 925, 950, 975, 1,000, and so on and so on. And therefore, you have good levels ahead of you that you're not just making up, and you're also not just holding a position going, I wonder where it'll stop. So at least this time going forward, you'll be looking at it in a good sense of levels ahead of you. You're not just holding a position with greed. Again, you hear me talking about how to take greed out of your trading in every step of this, and that is because it is one of the most important factors of your trading is the trading psychology, the fear, the greed, and how you can control these emotions. And a really big way I like to control my emotions is through the confidence behind my charting, like the confidence behind my trading abilities, and it is all through this preparation, which I do so, in which I build my confidence. So definitely, take all of this, notate all of this, go back, test a couple charts you like. I know a lot of people like saying Amazon's going to go hit new all-time highs. So let's break that down real quickly. Let's go to this chart. Let's look at the all-time highs. So you can see this is the all-time, chart here with the weekly time frame. So I'm going to mark the meat of the bone so I can see right here these last 3 weeks are definitely what I need to be watching. So let's go look at that. So as you can see, price has already broken new all-time high above 35.05 for the meat of the bone right here. Now we have to wait for double confirmation. This is not a buyer candle. I'm not marking the top of that. So 35.54 is where you have to double confirm is Amazon going to move higher? Is it going to go to 35.75, then 3600, then 36.25, 36.50, 36.75, 3700, and so on and so on? You don't know that for sure, but what you can do is prepare. So now I'm prepared. It is already looking good to go to 35.50. So now I know tomorrow I can go onto my day trading levels and I can mark Amazon's pre-market high, and I can look for calls above whatever the pre-market high is to that 35.54, utilizing my bigger and smaller time frames together to make a more effective trade plan, a more effective trade. There's very high trade probabilities right there in which we just went through. So again, visualizing the probabilities, you're going to be looking for that 35.50s above pre-market high. It ends up breaking back below this, you're looking back to those other pre-market levels and so on and so on. But I just want to show you guys it is not impossible to chart all-time high levels. But let's get into the next section. All right, so before we get into the very last section of this where we talk about the TA routine, I really want to talk about just one more small tactic I use on a lot of stocks, literally every single day, every single week, in which you can utilize on monthly time frames, yearly time frames, weekly time frames, daily time frames, your bigger time frames though. And this is from the perspective of a pattern trader. So as a pattern trader, I really love being preemptive. I love looking for candlesticks on the bigger time frames to open up at certain spots so I can do different things. So a really big thing that I like to do, and this is just to break it down to super basic mode, is let's just call it the gap strat. Okay, so the gap strat is just going to be based off of two patterns. Okay, so a big thing that I like to watch are engulfings and then my piercing line / dark cloud covers. So let's just look at this through the eyes of a pattern trader. So you have your bearish and bullish engulfings, you have your bullish piercing line, and your bearish dark cloud cover. All right, so these are things that I kind of look for whether I like it or not, So whenever I look at this chart, I instantly see a bunch of different, patterns. So instantly I see a bullish harami, I see a candlestick gapped over in which was a dark cloud cover, I see a bullish engulfing, I see another dark cloud cover, so I see a lot of different patterns, and know those aren't all going to play out how I just said they will be. I'm just saying from a day trading point of view, these can help you out. So let's look at this from just a pattern. So a big thing with pattern trading is positional. So no, I would not be looking to just grab puts on this whenever I feel like it. But as you can see, this candlestick started above this candlestick. So this day opened here. So let's look back. So this day opened here, closed here, right? So let's clear that. Next day opened above this, so it had to have gapped from here to even be there, right? So that's what I mean by a gap strat. It gapped up that far. Okay, so that's something I like to notate. Okay, so with a dark cloud cover, I always like to mark my 50% control point of my previous day, and then I like to focus on that pre-market. So I know that Berk B is going to be looking really good for a pre-market breakdown. So I'll be looking, of course, under my pre-market low, my previous day lows, all that good stuff. So let's mark our BB system. Let's mark our previous day levels. We got our pre-market level already, and our pre-market low. So right there. So of course we're going to be looking for puts about under this level right here, and for calls above this right here. So being preemptive, we saw that Berk B looked like a dark cloud cover, which is a bearish candlestick pattern. So of course we're more biased towards puts, but we're going to of course still set up a day trade plan for both sides. So it looks good for puts under this 280.25 to the 279s. Yes, so as you can see, the first 10 minutes didn't really give us a good day trading opportunity, but you could still see how this price action will help you in the future. So no, you weren't able to take a good day trade opportunity right there, but you can still see for the future how that would help you. So that will set up more day trading opportunities. So right there, no, it didn't end up holding, didn't end up giving you a very amazing day trade opportunity. But as you can see, it set up another day trade plan, set up another perspective in which you can look at these charts that way. So any other time you see a candle gap up above something or gap below something, to mark one, the outside of the pattern, the control point, and then also go set up your BB system, go set up your pre-market system, your previous day price action, so you can see other day trading opportunities. So I would have known below that point right there, that would have been really good for puts. That's actually where price ended up holding all day long for support. So right there, no, you would not have been able to take puts for a lower play, but as you can see, it does set up for amazing day trading opportunities. So you can see there's a bunch of different ways you can look at these charts. So again, utilizing your bigger time frames to your smaller time frames. For this last section, I had a lot of people ask me, how are you using your bigger time frames to help you on your smaller time frames, besides through my pattern trading techniques and through how I look at that kind of stuff. And I link everybody the same thing because I use it, the TA routine. If you are not utilizing the TA routine, you are missing out on a lot. So let's go look at a couple other examples. So Apple, let's break this one down. So Apple was an example I showed you guys in which price not only held over its previous day levels, but also its pre-market system came down, gave you a 40% entry and an 80% entry and another 40% entry up here. How would you have known to sell somewhere up here randomly? You're above everything. Utilizing your TA routine, you would have had everything you needed. So let's mark some emerging candles. Let's mark our gap range right here. Let's mark another emerging candle here, another emerging candle here. And what I mean by that is marking the tops of my buyer candles on the daily time frame. So I'm going to mark the tops of my buyers, any gap ranges that I see, as much as I can see. So far, we've marked everything. Let's go look over here on the right. And as you would have seen, yes, there was another level in which you could have definitely sold at. There's another gap range right here, actually. So as you can see, though, marking those levels, it gave you another level there. So let's look at it on the smaller time frame. So after price broke out here, you see how it also lined up with a bigger time frame level. So that 139, just like I said earlier, it doesn't take away from that level's importance. If anything, it adds on to how awesome that level is, how confident you should be in that level, how strong that level is. So once that level is broken, you can definitely assume calls if buyer volume, of course, is above average, or you have rising buyer volume. You want rising buyer interest above a level positioning, then you're going to be looking good for calls. Price ends up pushing up. What's a good initial target? You guys hear me say, every 50 cents, every dollar, your psychological levels, but, it was really cool that I was able to go to my bigger time frame and mark another level in which price tested here on Apple. Let's go look at another example. Amazon. When I was looking at Amazon earlier, we were looking at it from this point of view. Above that high, and we're looking at it for calls. You can see it bounced off of that pre-market, held above the previous day high for calls, held above this previous day high for calls, but there really wasn't anything else out here that we could have gone off of with, pure confidence. What else could you have marked? Your TA routine. So let's mark that emerging candle, gap range, emerging candle. Zoom in over here to the right. Nothing else over here we can really mark. There's one candle right here we can. And that's about it. You can kind of mark about right here. Now let's go look at that smaller time frame. Now you can see it's a little more filled up than before when I only had, this level, this level, this level over here. We only had these three, areas over here. We didn't really have anything price could go up towards. Price ended up pushing up and rejecting that bigger time frame perfectly. Ended up pushing up here and pushing off of that one perfectly. Ended up pushing above that one. So now you're able to see, other levels that have very high significance after those levels on your smaller time frames. So again, this is what I mean by utilizing your bigger time frames to help you on your smaller time frames. What's another one we can look at? Let's find another one. Boeing. Let's clear all this. So besides just the day trading system I teach you guys, previous day levels, our pre-market system levels, what are other levels we could have marked? Bigger time frame levels. Let's zoom in. Emerging candle, gap range, emerging candle, gap range, emerging candle. Marking more levels in between. There's another level here, there's another gap range there. Let's zoom back down. You can see after price ended up pushing down, there is another bigger time frame level here. As price kept pushing down, there is another time frame level, bigger time frame level here. So you can see we even were able to point out where price pushed down after this just crazy drop. So yeah, anybody would be like, damn, how would anybody know where that fell to? Right there, price just ended up pushing right off of that level. Where did price push off of when it was trying to hold support? It was holding off of that bigger time frame level. So now you have multiple targets outside of your smaller time frame day trading system here. So I really hope all of this helps you out. If you haven't already, please make sure to go check out the TA routine. I have tons of videos on this, tons of explanations, a huge playlist on the channel. So definitely check that out. Hit me up about it, ask me about it, ask people in chat about it. But I hope you guys really enjoyed this video. This is the 5th installment to the workshop videos we do here. So if this was something you definitely enjoyed, please leave a like and comment on this video, and I'll see you guys in the next one. Thank you.